And to discuss more on the stocks and global economy is Justin Harper of IG Markets. Now, Justin, the Dow hit a 4-year high this week. Are stocks primed for a correction or a second leg up?
I think there's an old stock market adage that talks about selling in May and going away. And looking at the markets last night, that would be pretty sage advice because they took a downward turn off of the US unemployment figures there. So we're seeing a road to recovery in the US economy, and it seems to be quite rocky at the moment there. We're seeing some good data and then bad data. So if you're going to be an investor and you're trading in these markets, you're going to have to be patient here and ride out these peaks and troughs. And we're seeing that very much with the US economy. Good news followed by bad news.
Well, there are peaks and troughs. US first quarter GDP growth slowed to a 2.2% annual rate from 3% in the fourth quarter. Will Friday's monthly jobs report for April disappoint, do you think?
I think those figures will be keenly watched. So last night we had the ADP figures, which aren't as widely viewed as the non-farm payroll figures on Friday. I mean, it's not looking good. Having looked at last night's figures there. Manufacturing came in better than expected earlier in the week, but we look at the employment figures and they have been slowing down. The surprise element has gone. When we first sort of started the year, there were increasing employment all the time. Now that's slowed down and there's a bit more pessimism about the US economy and the effects of the Eurozone. So I'm not holding out too much for these figures on Friday. I think the fact that they could come in weaker, I think is now being priced into the market.
Well, we know the growth in the US is softening, the slump in Europe deepening, and Britain has fallen back into recession. Is the global policy pendulum shifting from austerity toward growth?
I think, it's as you say, there's some huge austerity measures taking place in Europe, and that's going to have a massive drag on all of its trading partners here in Asia and across in the US as well. And we're seeing that. We saw that last night with some very high unemployment figures within the Eurozone. Growth is never going to be in a straight line. There's always going to be some, some troughs along the way, as I said earlier. And I think that's what we're going to see for, the next 12 months to 24 months there. The crisis we're seeing is so deep-rooted within Europe. It's not going to be solved anytime soon, and it's going to have a drag on the economy on a global stage because all of the economies are interconnected.
Well, what about growth in China then? It has moderated as was intended. Is it likely to remain at a more measured and sustainable pace in the future?
A lot of observers talk about the China economy and hope now that it's bottomed out. We had some very positive manufacturing data out this week, which showed that it's actually it's contracting, but at a slower pace. And I've always sat on the side of the China bulls. I've never thought it was going to have a hard landing. I never really thought it was going to have a soft landing. It's still growing by about 8% a year, which is better than any other developed economy. So I'm very confident about the Chinese economy, and I think that any sort of slowdown now has hit its bottom, and I hope that it will move forward and continue to grow, add jobs, and see the economy expand as well. But of course, this is very much dependent on its trading partners like the Eurozone and the US. So it's dependent on those as well. But within itself, I think China is doing a very good job at manufacturing a slowdown.
Well, let's turn to one of its trading partners, the Eurozone. The European Central Bank meets later today. Do you expect further easing measures as the long-term picture in the Eurozone remains negative?
I think the timing couldn't be worse for the ECB at the moment, having last night's figures showing manufacturing had slumped and unemployment had hit record highs across the Eurozone. And now the pressure will be on the ECB to act. People will be saying, well, what are you going to do? Because we're going to slip into recession and the economies are contracting. So I think there'll be huge pressure on the ECB to make a decision. I don't think we'll see a knee-jerk reaction today. I don't think they'll make any changes to interest rates or to monetary easing. But I think the pressure will grow in the coming months to actually put more input into the financial input into the Eurozone.
And specifically, is Spain too big to save and too big to fail, do you think?
I think Spain is probably too big to fail, but I don't think it's too big to save. We have some rescue funds that have been set up, with the European Financial Stability Mechanism is set up there with, 700 billion worth of euro there to save another economy. They've already saved Greece with a bailout, and they'll probably see Spain as another case where they might have to step in. It's a huge economy. It's the fourth or fifth economy and the biggest economy in Europe. So, it's very big and it have a very damaging effect. But I think the ECB has made a rod for its back, and it would have to step in if things in Spain got worse. And things in Spain are bad. It's got one of the highest unemployment rates in the developed world at 25%, and it's got some huge budget cuts it needs to be made. So it's very much on the radar screen there, and it's causing a lot of concern across the globe.
And what about neighbouring France? Presidential election this Sunday. Will a win by Nicolas Sarkozy or François Hollande be welcomed by the markets?
I think both the presidential candidates face the same problem, regardless of which political party they belong to, that they're, faced with the economy that needs to be restructured, is facing huge issues of the second biggest economy in the Eurozone. And so whoever you are, I think, you're going to have a very tough time ahead. However, I think the smart money is on Sarkozy because, of course, he's been the president for the last 5 years and he's, he's overseen the French economy. And he's also very much, in partnership with German Chancellor Merkel as well. So he has a good relationship with her as well. And any new candidate would have to build that up from scratch. So I think the smart money would be on Sarkozy, and if anyone else comes in to take that, it will cause some jitters in the Eurozone and sentiment towards it.
Let's go down under then. Australia's central bank cut interest rates by 50 basis points. Do you expect further easing to counteract fiscal tightening in the still high Australian dollar, Justin?
I think the Australian Central Bank have been tweaking with the interest rates, and the one we saw this week of 0.5% was caught many by surprise. The interesting thing about the Australian economy is very much two-tier. We have, the resources sector and mining, which is powering ahead and doing very well. And then the mainstay economy is actually sluggish. So they do have to step in. They do have to cut interest rates and try and spur growth. So I think they'll, I wouldn't rule out another cut, probably not next month after this big cut we saw this week. But I think very much that, that's definitely in their arsenal to look at more cuts to stimulate growth in the Australian economy.
OK, thanks so much, Justin, for your time. That was Justin Harper of IG Markets Singapore. And that's the business news for now. Back to Suzanne and Steve.
Thank you, Yvonne, for that.
We're off for a quick break, but coming up next, we'll speak with an author about the notion of conscious inclusion and of being big at the office.